right, let's talk Realty Income. Ticker symbol O. It's a question we've been getting a lot lately. Is it still a good investment to hold on to? Especially with but their stock price kind of, been kind of going down a bit. A lot of investors are understandably a little unsure about what to do. So we're going to take a real deep dive here, try to figure out what's going on, why that decline's happening. We're going to look ahead to what the experts are kind of predicting for 2025, and then ultimately, we'll try to help equip you to decide if Realty Income's still a good fit for you, for your portfolio.
Sounds good.
Okay, so first things first. Let's talk about what's been going on with the stock price. Why is it down? One of the big things that we've seen recently is rising Treasury yields. And I'm guessing that's probably not great news for REITs like Realty Income.
You're exactly right. To really understand why that is, we got to kind of zoom out and look at the bigger picture. When those Treasury yields go up, interest rates tend to follow suit. And that makes borrowing money more expensive, not just for, you and me, but for big companies like Realty Income. And when their borrowing costs go up, it squeezes their profit margins on any new deals.
Makes sense. It's like trying to budget for groceries when the prices just keep going up.
Exactly. And then on top of that, investors start to see those higher yield bonds as a safer, maybe more attractive option compared to those REIT dividend.
Oh, interesting.
Yeah. So it puts this extra pressure on REIT like Realty Income to offer, really competitive dividend yields just to kind of stay in the game.
So it's like a double whammy for Realty Income. Borrowing's more expensive, and they've got to compete even harder to keep those dividends attractive.
Yeah. It's a tough spot to be in for sure. And then you add to that, those worries, those rumblings about a potential economic slowdown.
Oh, right. Everyone's kind of nervous about that.
Yeah, and this is where things get particularly interesting for Realty Income.
Yeah.
Because they're heavily focused on retail properties.
Right, because if people start tightening their belts and not spending as much if there's a recession. I mean, wouldn't retail businesses be some of the first ones to really feel it? And then wouldn't that trickle down to Realty Income?
Yeah, that's exactly the worry. Retail tends to be pretty vulnerable during economic downturns. People cut back on that discretionary spending, and those retail stores, they might struggle to pay their rent.
And then that obviously affects Realty Incomes, their income and their ability to keep paying those dividends that investors like you rely on.
That's right.
Okay, so not exactly a ton of great news so far. We've got these rising interest rates kind of squeezing their profits, and then this potential recession looming out there, potentially impacting your rental income. So what does all this mean for their future? I mean, let's look ahead. What about 2025?
Well, the predictions are kind of mixed. Some analysts are forecasting decent revenue growth, maybe around 6% for Realty Income in 2025, which, on the surface, that sounds pretty good. It's in line with their historical performance, but we need to dig a little deeper.
Okay, here's where it gets interesting.
Right. So some analysts have set a 12-month price target of only $62.04. Which, does suggest some potential upside. But is it enough to really offset those recent losses and make it, make it worth your while as an investor? That's the big question.
So even if their revenue grows, the stock price might not.
Skyrocket.
Right. It might be a slow climb. So patience is going to be key here. Okay, so let's talk about, Realty Income's ability to handle all this. I mean, one thing that jumps out to me is their portfolio diversification. Like, they've got over 6,500 properties across all these different industries. I mean, that's got to count for something, right?
Oh, absolutely. That diversification is one of their biggest strengths. It helps spread the risk. So if one sector takes a hit, they've got others to kind of, cushion the blow. And what's really interesting is that they don't just diversify across industries. They also focus on leasing to tenants with really strong financials, often companies with investment-grade credit ratings.
Oh, that's smart.
Yeah.
So even if there is a recession, and some businesses are struggling, they've got those reliable tenants who are more likely to keep paying rent.
Exactly. They've built a lot of resilience into their business model through that careful tenant selection process.
So diversification, strong tenants, that's painting a slightly brighter picture maybe. But let's talk about, the big question. Buy, hold, or sell. Currently, Realty Income is trading at a forward 12-month. Price to FO ratio of 12.46x. Now, before we go any further, maybe you could just quickly explain what is FOV and why is it so important for understanding REITs?
Sure, yeah. So FFO stands for Funds from Operations, and it's a key metric for REITs because it gives like a clearer picture of their operating cash flow. You see, traditional earnings don't always reflect the true cash flow of a REIT because they include things like depreciation, which is a non-cash expense.
So FFO is a more accurate look at the money that they're actually generating.
Exactly. And for Realty Income, that 12.46x price to FO ratio is actually lower than the average for retail REITs, which is 15.95x. So this could suggest that Realty Income is undervalued.
Yeah.
But we need to look at the bigger picture here.
What do you mean by the bigger picture?
Well, it really comes back to your individual investment goals and your risk tolerance. Are you okay with potentially writing out some volatility for the chance of long-term gains? Or are you looking for a quicker return? And how comfortable are you with the level of risk associated with REITs in general and Realty Income specifically?
So even if a stock looks like it's undervalued, it doesn't necessarily mean it's the right fit for every investor.
Exactly.
Okay.
But one thing you can't ignore with Realty Income is the allure of those consistent monthly dividends. That's a big draw for a lot of investors, especially those seeking a reliable income stream.
Right. All right. So we've covered a lot of ground here. We've talked about the challenges, the potential risks, and some of Realty Income's strategies for kind of mitigating those risks. But there's still a lot more to unpack here.
Definitely. And in the next part of our deep dive, we're gonna take an even closer look at those challenges, including that looming potential of a recession and those ever-present interest rate hikes, and we'll explore how Realty Income is positioned to navigate those headwinds and what it all means for you as an investor.
So stay tuned for part 2, where we'll continue our deep dive into Realty Income and equip you with all the information you need to make an informed decision about this investment.
Welcome back.
All right, so we left off talking about some pretty big challenges facing Realty Income, those rising interest rates and the possibility of a recession. So I want to kind of zoom out a little bit here. Look at the bigger economic picture. How are these broader trends impacting REITs like Realty Income? And more importantly, how could they impact you as an investor?
Well, it's all connected, right? Those rising interest rates, they're directly tied to what the Federal Reserve is doing, trying to get inflation under control. And those rate hikes, they really have a ripple effect throughout the entire economy, and especially in real estate.
Right. So when the Fed raises rates, borrowing money gets more expensive for everyone.
Yeah.
Including companies like Realty Income. And we talked about how that impacts their profit margins on new deals. But are there other implications here, other things that we should be thinking about?
Yeah, absolutely. Those higher borrowing costs, they can make it a lot tougher for REITs to acquire new properties, which is, essential for their growth. And it also affects their ability to refinance existing debt. Think of it like trying to refinance your mortgage. When interest rates are sky high, it can make things a lot less appealing, sometimes even impossible.
Right. So it's not just about those individual deals being squeezed. It's also about limiting their ability to expand and manage their debt effectively. And that could definitely have a long-term impact on their growth.
Exactly. It's a delicate balance.
Okay.
And then, of course, there's that looming question of a potential recession.
Yeah. How serious is that threat, really?
Yeah.
I mean, what are economists saying? And what could it mean for Realty Income's tenants? Especially those in retail.
Well, nobody has a crystal ball, unfortunately, but there are definitely some warning signs flashing. Persistent inflation, slowing consumer spending, global uncertainty. All these factors they contribute to that feeling.
Yeah.
That a recession could be on the horizon.
Okay, and if that happens, what's the likely scenario for Realty Income's tenants?
Well, as we discussed, retail tends to be one of the first sectors to really feel the pain during a recession. People start cutting back on that discretionary spending, sales dip, and suddenly those retail stores, they're struggling to pay rent.
Right, and that's where things could get really tricky for Realty Income.
Yeah.
If their tenants can't pay rent, that directly impacts their revenue and their ability to,
to pay those dividends.
So are there any kind of safeguards in place, to protect against that potential downturn?
There are. Remember, Realty Income's been very strategic in choosing their tenants. They've focused on high-quality companies with strong financials, companies that have, weathered economic storms before. Many of them have those investment-grade credit ratings we talked about,
That's
which
true.
means statistically they're less likely to default on their rent, even during a recession.
So even if the economy takes a hit, there's a good chance Realty Income's still going to be collecting rent from those reliable tenants, which helps them maintain those dividends. That's reassuring. But it also begs the question, how secure are those dividend payments really? Given all the uncertainty we've been talking about, could Realty Income be forced to cut their dividend if things get really bad?
It's a valid question, and it's on a lot of investors' minds. But let's look at their track record. They've been paying out monthly dividends for over 50 years, and they've actually increased those dividends for over 25 consecutive years.
Wow.
That's a pretty impressive streak.
It really is. But how can they maintain that consistency? Especially, if things go south with the economy, where's that money coming from?
Well, it all comes back to those fundamentals. Their diverse portfolio, their focus on financially solid tenants, and their generally conservative approach to debt management. These things combined allow them to generate a really reliable stream of cash flow. And that's what supports those dividend payments. They're not just paying out dividends on a whim. There's a solid strategic foundation underneath.
So they're not just hoping for the best. They've built a business model that's designed to withstand some serious pressure.
Exactly.
And that's what makes Realty Income so attractive to income-focused investors, especially in times like these. They offer that predictability and reliability.
Yeah, it can be hard to find elsewhere.
Okay, so we've got the dividends, we've got the solid business model, but we can't ignore the fact that the stock price has taken a hit recently. It's been on a bit of a roller coaster.
Right, reflecting those anxieties in the market.
And that's the part that's got investors wondering, is it time to jump ship or ride it out? So what's your take on the future of the stock price? I mean, can we expect a rebound, or are we in for more turbulence?
Oh, if only I had that crystal ball, right? Predicting the stock market is a tricky business, even for seasoned experts. But we can look at the factors that are likely to influence the stock price moving forward.
Okay, what should investors be paying attention to?
Well, first and foremost, keep a close eye on the overall economic picture. What's happening with inflation? Will the Fed continue raising rates? How are consumers reacting? These big picture trends, they're going to have a direct impact on REIT performance in general and Realty Income specifically.
So those macroeconomic factors are key. But what about things specific to Realty Income? What kind of company performance indicators should we be looking at?
That's a great question. You want to see if they're continuing to
Yeah.
grow their portfolio strategically. Are their occupancy rates staying high? Are they managing their debt in a responsible way? These are all positive signals that point to their ability to continue delivering those dividends and potentially see their stock price recover.
So it's a combination of monitoring those broader economic trends and keeping an eye on Realty Income's own performance.
Exactly. Okay.
And it's important to remember that investing is a long game. Don't get too caught up in the day-to-day fluctuations of the market. Try to focus on the fundamentals. Make informed decisions based on your own investment goals and your level of risk tolerance.
Yeah.
And remember, those monthly dividends, they can help cushion the blow. If the stock price continues to fluctuate, they offer a level of consistency that can be very appealing in a volatile market.
Solid advice. All right, so we've covered a lot of ground. Examine those potential threats to Realty Income's performance and their strategies for navigating those challenges. But before we make any conclusions, I want to shift gears a bit and explore another crucial aspect of their business, their impressive dividend history. We'll analyze their track record, assess the sustainability of those payouts, and discuss how that all factors in to the big decision of, whether buy, hold, or sell. So stay tuned for part 3, where we'll delve deeper into those dividends and help you arrive at an informed decision about your investment in Realty Income. Welcome back to the deep dive. We've spent a lot of time kind of dissecting Realty Income, looking at the good, the bad, and the uncertain. But now it's time to talk about something that really makes them stand out, those consistent monthly dividends.
Yeah, those dividends, they're a cornerstone of their appeal, especially for investors who are looking for that regular, reliable income stream. It's almost like getting a paycheck every month. But instead of from an employer, it's from your investments.
Exactly. And that can be, you know, super appealing.
Yeah.
Especially in a market like this.
Mm.
You know, a lot of volatility out there.
Okay.
So given everything that we've talked about, you know, the interest rate pressures, the recession worries, how confident can investors be in the sustainability of those dividend payouts? I mean, are those checks going to keep coming? Or could Realty Income be forced to make a change?
That's the million-dollar question, right? And it's a smart one to be asking. But you know, remember, we've already talked about Realty Income's, you know,
Yeah.
their impressive track record. I mean, they've been consistently paying out those monthly dividends for over 50 years. That's not just luck. It's a deliberate strategy. It's based on building a resilient business model.
So they're not just, you know, throwing money around. They've got a system. They've got a foundation for those payouts. But I'm guessing it's not as simple as just, you know, having a long history of dividends. What factors specifically contribute to that consistency?
Yeah.
And really give investors confidence that those dividends are going to continue?
Well, a lot of it goes back to, you know, we've already discussed their diversified portfolio, you know, spreading that risk across a wide range of industries and tenants. That's a huge factor. And we can't forget about their focus on high quality tenants with strong financials. Those tenants are more likely to keep paying rent even during tough times. And that provides a steady stream of income to support those dividends.
It's like having a safety net woven into their business model.
Exactly. And then on top of that, they're pretty conservative when it comes to managing their debt. You know, they don't over leverage, which means they're not, you know, overly exposed to interest rate hikes, and that responsible approach to debt contributes to their ability to you know, to maintain those consistent payouts.
So they're playing the long game here, not just chasing those short-term profits.
Exactly.
Okay, so we've established that Realty Income's dividend history is impressive, and their business model seems to be, you know, geared towards maintaining those payouts. But let's be real, you know, past performance doesn't guarantee future results. So if someone's listening to this and they're maybe on the fence about Realty Income, what key takeaways should they be walking away with?
Yeah, that's a great question. I think the biggest takeaway is that Realty Income, it's not a get-rich-quick scheme. You know, it's not about flashy short-term gains. It's about slow, steady growth and consistent income.
So patience is key here.
Absolutely. If you're looking for an investment that provides that reliable stream of income, and you're comfortable with, you know, the potential for moderate but steady growth, Realty Income could be a good fit. But you need to be, you know, realistic about your expectations.
And I think it's important to emphasize that no investment is without risk, even with their impressive track record and strong fundamentals. Realty Income faces challenges, just like any other company.
That's absolutely true. We've talked about those challenges in detail. You know, rising interest rates, the possibility of a recession, shifts in consumer spending. I mean, these are all factors that could potentially impact Realty Income's performance.
So it's all about weighing those potential risks against the potential rewards.
Exactly. And ultimately, the decision of whether to buy, hold, or sell Realty Income, it comes down to your individual circumstances, your investment goals, your risk tolerance, and your time horizon.
It's not a, you know, one size fits all answer. Right. It's about, you know, doing your homework, understanding the company, assessing your own needs, and making an informed decision that aligns with your personal investment strategy.
Couldn't have said it better myself. And remember, you know, this deep dive is just a starting point. Do your own research, read those analyst reports, explore different perspectives, and really consider how Realty Income fits into your overall investment portfolio.
Great advice. It's about, you know, empowering yourself with knowledge and making decisions that are right for you. So as we wrap up our deep dive into Realty Income, we want to leave you with this. Investing is a journey, not a destination.
It's about continuous learning, staying informed, and adapting your strategy as needed.
And remember, we're here to guide you along the way. So keep those questions coming, keep exploring those investment opportunities, and keep diving deep into the world of finance with us.
Thanks for joining us on the Deep Dive.